Different regalia for today. Tell me what you think. Give me a like if I look like Hunter S. Thompson hunting men, or if you think I look more and more like my dog every day on my shirt. Give us a share to Facebook, Schmuckerberg, and Squinter, Twitter, and all those others. We appreciate it. It's great likes. I'm telling you what I want to talk about today with you. We want to talk about crypto. It's a Crypto Sniper YouTube. Yes, here come the crypto pontifications from up on high. So what are we trying to say or do? Well, the key thing about what's happening right now, and I kind of had to chill out because I started to find myself getting sucked into the vortex, and I recognize something that's happened so many times in my trading career. We start watching the charts on 5 minutes, 10 minutes, and 15 minutes, when in actual fact, big picture, standing on the mountain is where you need to be. The key thing. And in a previous YouTube, 2 or 3 back, it was Bitcoin dominance generally, be net in Bitcoin through to this 26K. That was this YouTube you're looking at here that we did with different variety of spectacles, a little less extrovert and out there. I actually in the end put a couple of tips down. So I'm just going to rehash these because I did it after the video and many of you will have missed them. So one of the key core concepts of this, and I need to show you the chart, pardon my French, I need to show you my chart on Bitcoin first to just give it context. So hold on while we put on Bitcoin. And I will also be passing by traditional markets. So some of you are going to be going, why is he going to talk about the lira and gold and who cares about all that malarkey when we are crypto only guys, and crypto is our sole wealth plan. This is how we're going to do it. Well, there's things you can learn from the traditional markets. There's things you can learn on how things go up. There's a lot of things going on, and there's a lot that you can learn. So the key part about our community is we want to position people for 2, maybe 3 key major moves that will often transcend any individual year into the next, so that they can have those as their foundational key investments and subsequent potential light to moderate leverage, providing they've been trained, providing they understand all the provisos that go with judicious use and earning the right to leverage to maximize during these reset times. So key themes were gold and euro, gold and pound, net long the gold, and including gold dollar. But the key close points came off the other cross pairs because the dollar had done its own footprints in the snow and had broken up the structure slightly. So we'll go through that and we'll see what we can learn that will help us understand managing from one macro trend that we called around about April 19, ran all the way through 19 until target, and will in future, I expect, take back up. But you've noticed how long the pullback has been and how brutal. These are the difficult stages, and they will come again for Bitcoin. Mark my words. Yes, it will be quite a bit higher up, but then everybody will be losing their shirt unnecessarily because they will have leveraged inverted pyramid. And the further it goes up, the more it's a positive feedback loop, the more they're making P&L, the more position size they can earn. And I get reminded about that guy who started with 1 Bitcoin, ran it up to 300 Bitcoin and back down to naught again. And he was over at the 17K level before even the final high. Do not have that experience if you can. It's not very good for family members. He got admitted to be totally, waking up. Everything was so intense, ignoring his family and all those things. And it's almost a good thing he lost the money. No, it isn't. You can do this in a far more low tempo, relaxed way, maximize and keep yourself standing on the mountain with the world view lying below and beneath you, where all aspects are seen, understood like a general, rather than a confused foot soldier in the pandemonium of the everyday, every minutia moment struggle of battle. So this is what Bitcoin's been doing. And before I go through those tips that I was talking about on the other clip, it's important just for everybody to realize. So this is some HVF structure that we do. that you will see. But the key aspect is, for us, it's a first cup gold nugget. It caught us slightly sleeping. We thought, well, we still think there's going to be a down leg. We didn't, and then suddenly we said, no, it's quite clearly first cup gold nugget, and we have to treat it as such. And what did that mean? Well, it meant that actually the final shakeout had already happened, and it was COVID-19. So if you look at the whale charts, the whale selling where they do the big balls, I'll do that maybe in another video. Other folks have done videos on that where you see really big forced sellers. There was a massive amount of forced selling that occurred at this point down here. Let's grab the pen. Let's grab our favorite color. Fill in the missing word below in the chat if you think you know what that one is. There was a massive, I'm moving it around like a mouse. Let's go to draw mode. There was a massive whale closure of sale in the CV19. Now I warn, and I say it many times on this channel in trading and in many other advices, but particularly it occurs in crypto, that you get a shakeout to the downside before the upside. And actually, the pandemic, scandemic, as it can or should be known, was exactly that. We felt that you reflated up to that level and that there was still scope for it to possibly go down, but then the whole $1 trillion relief going on, and then later we got the news of various corporates now becoming public about investing in Bitcoin, and then we had PayPal, and we ended up running. So overall, our setup got marching. We've been expecting it and we were waiting for it, but it also likes to do, as markets often do, hurry up and wait. So we thought, we're hurried up, maybe we need to wait a little bit. Boom, off it went. So that is the final little squeezy Japanesey. That's right, we call it a primer, and you can find out about a lot more of our phraseology and terminology by joining our community, going through the learning so that you can maximize with judicious leverage this bull market. Let me be clear, there are multiples to be made, and there are also landmines to be stood on. If you are alert, smart, methodical, recognize that the move makes you the money, not the sizing, you will get a multiplier through Hunt Volatility Funnel method and being in the community that others that will hodl won't. And they won't take that half step back by spending some fiat to learn to do it better. Because everything's just got to be in Bitcoin and everything will get leveraged, and lots of inverted pyramids and blow-ups will occur. And they will end up poorer. And I can absolutely assure you, because I've been able to, in my own beautiful world of incompetence, able to do this a number of times in markets through emotionality and greed. You can go long in a bull market and lose your shirt. Let me say that again. You absolutely can go long incessantly, never shorting in what is a bull market, and lose your shirt. And the key word there is leverage, and the bad utilization, the emotional chasing of pumps, and then the subsequent minor pullbacks that become significant because of sizing will destroy you. It's far better actually to be a passive hodler than a newbie, untrained, high leverage trader. And the exchanges are giving you 100x, 200x, 500x, who knows, 50x, and those are absolute 45 magnums to babies. And I've been that baby too. So recognize it. It comes and it happens. It's dangerous. Please. So be aware of this danger. We want to make green. You want to come out of this experience a lot greener. And if you can understand how to do this properly, you will make a multiple. So since this breakout, if we just show for a second our key lines of draws there, since this breakout that did its classic first stage of our 5 stages of a breakout, you'll learn about that as well, where it broke over here, made our first interim here, then did a head and shoulders, pull back, and return moved to what we call the funnel, and then did a little wind up bull, which is where we were wrong on Ethereum. Bitcoin looked like it could be bullish or bearish, but either. And we weren't sure that we were in first cup gold nugget yet, and we were still waiting that down leg. Ethereum looked sick and flat. In the end, Bitcoin God market, it decided up, everything else got dragged up with it. And then we said, that's it. That clearly proves to us that we are in first cup gold nugget mode. Since then, in weeks, guys, you've had, let's just count them. You've had 1 week since that return move, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks, with a little look one way, absolutely booted the other way, run of green candles. This is what I would call a very good performing breakout to the long side. It is asserting high confidence for the eventual target and a likely 26k run up top there. So just sub the 26k, the momentum should carry you through. We're going to talk about parabolic finishes through a line and how that's a worry, not just a good thing, and how and why you should be selling off into that and not FOMOing back in when it goes a couple of grand further and you think, damn, I sold too early. All of those greed reflexes are within every single one of you. I know that. I've seen it. I've taught it for years. I've felt it myself for years. They are within you all. You all have those inner landmines that your little foot is itching to step on. So don't do it and understand it. Toe tag it. Greed reflex. Sorry, don't need you right now. The move's making me the money. Okay? Adherence to process in a time of giddy times, because it will be giddy. You're going to have the market going and it's going to start to climb the Google aspects. We're still quite low on the Google search. We haven't made an all-time high. I will be showing you a couple of things. But let's go through that list, because I was threatening that and then I started to sidebar. So let's go through that list. Let's say goodbye to those little scribbles. So stay long Bitcoin for an extended period through 26k. By the way, that doesn't mean after 26k, sell all your Bitcoin. What I'm saying is there's two things you can do: hot pot, lukewarm pot, cold pot. Cold pot is investment. Overall, I personally will hold investment right the way through, including past target. I might trim slightly, but generally my bias now for during this period is that we will outperform that 26k, and I will talk more on that after we've looked at our Turkish Lira, which is actually a market sniper topic, and the gold, which is both traditional markets, because you'll see there's some interesting things you can learn about key macro trade ideas. So you should have been long gold from last year. Bitcoin wasn't doing much great during that period. From 19, round about, I'll have to check the chart to get the month exactly right the way through until pound and euro both made their wind up HVFs after making the macro multi-year, almost 8 years, 7.75 year targets. At that point, you should be out. You would have missed a lot of churn, and actually gold's leaving me still a bit nonplussed, but it's to be expected. A major time frame target was made, and we get first stage progress decay, where you no longer made obvious upside, a lot of time bypasses, and you often have lots of pullbacks. So nobody makes too much money in there, because it's a lot of churn, unless you're a range trader, in which case you could be making some money. So that's where we're at with gold and silver, and also potentially with the lira, which we'll talk about now as well. So first of all, stay long Bitcoin for an extended period. That's investment pot. Now, if you want to, and this you've got to be real careful, because you've got to learn to shoot a rifle. And that rifle can turn into a hairline 45, and you can turn into a baby real quick. So you've got to be super careful. Light, judicious use of leverage, especially if you've got in and the just in time or fairly early in the stage, and there is more upside to come. But knowing when you're likely to face pullbacks, and that's the amazing thing about Hunt Volatility Funnel Method. Book a call below if you want to be part of us as we analyze it with HVF method, is that there are expected places where you're likely to have larger natural pullbacks. That's useful, A, for reducing any light leverage already, and then the opportunity to maybe near those lows playing out to reassert to the upside while you're still in the macro HVF. And after the macro HVF, when you get a bigger pullback and you're churning for a while, to get in for some of the overperformance, but first to bank a whole bunch of money that gives you that platform, that investment platform that is unleveraged. Remember that. You need that. That is stability. That doesn't see your net worth thrash around like a happy Labrador's tail. And you don't want that. You want stability. Okay? All right. So few pullbacks and shallower than expected during this process of the HVF move particularly. So a lot of the setups that you see in the charts with Bitcoin end up on the lower time frame. So if I drop to say 2 hourly, a lot of them just always seem to resolve to the upside. Last time in previous streams, I highlighted that in actual fact, to many basic technical analysts, they would have called that a head and shoulder and expected a down move. The problem is they don't understand the context of the macro situation they're in. They don't understand how to assess volatility. And we highlighted that you, instead of getting cranky and high on volatility, you are actually squeezing very low post that. And it points more likely, given the context of the macro HVF, that you will go up. And in actual fact, you go up very strongly, because it's totally counterintuitive and it turns into a moment that ends up doing what most people don't expect. Super strength. Again, this was a tricky period where we're looking at it, and it's kind of like the banana period, because you're making higher highs, but also big swings to the downside. So it's quite a bit of choppiness. Normally, that would indicate increased volatility. What normally happens when the talking, squawking heads of CNBC say it's getting volatile out there? What it means is the markets are going down. It's not actually correct. Volatility can come just on upside, but when you get bigger thrashing up and down, typically it's a sign for later falls. What did you end up getting? You got another cycle of move. So when you're in a very powerful super macro, and remember, this is a huge time frame HVF for Bitcoin's life. I was discussing with the premium guys this morning on voicemail, just to put it in context. That 8-year, 7.75 year setup of pattern for gold sounds like a huge particular pattern. Currently, Bitcoin, since December 2017, and now we are virtually 2021. Okay, we broke a month or two ago, so September, let's say. You're now from end of 17, all of 18, all of 19, and most of 20. You know, at least 6 months of 20, maybe into so. So you're talking about 2.5 years. Now, in percentage terms, in Bitcoin's lifespan, 2.5 years since when it was properly trading in 2010 is 25%. Let me just talk about time frame. 25%. 10 years, Bitcoin's been around, kind of. Yeah? Give or take. 2.5 years is 25% of its entire lifetime. Do you know what size gold pattern that gold has been actually trading on markets we would need to have as a setup? Do you know how many decades? It possibly run into multiple centuries for the data that gold has been in existence and traded in markets. So it is huge by proportion to its existence. And this is a macro setup. It truly is, for Bitcoin's lifespan, a super macro setup. So therefore, most things revolve into continuation upside, even reversal patterns right now. So people say technical analysis stops working. It doesn't. You just don't understand the macro picture and the context of what you're in, that head and shoulders are failing like this. We talked on a smaller YouTube on a smaller time frame about this structure, and how initially it was interesting there, but that we thought it would dig a bit deeper and give you a continuation. You had to be patient for it. That is broken up. We even said to you, target on that, 17,000. What will happen? You'll get a little bit of bedwetting after that in terms of that. But that is a small continuation in something that is already in a macro continuation. Those are great for leveraging up, taking a small bit extra out and reducing 90% of that leverage and keeping a teensy weeny bit that you've earned your way in, and you've now got that profit in cash banked against you so that your margin is solid. That's how you can maximize along the way. done incorrectly, where you pyramid in and you're not locking down, anything you make on leverage will destroy you. So for most people, investment only and hodl now during this period is almost best. Unless you can trust yourself to get a multiple and adhere to a process, you really need a method to do that. Going back to the tips and clues, because that kind of dovetails in with this chart that I was showing you, and we'll go to the other markets, what they teach us as well once I've done with this. So placing the micro orders at the key points when the pullbacks are expected. By the time we finish this video, we will have given you all the levels that we think will be run for which you may get some degree of pullback, in spite of the point we've made earlier that most pullbacks will disappoint because there is a real bull market. But you'll get something slightly larger than normal that could see late tactical margined entries make their way in. I'm keeping an eye on the chat. We love to have your comments. I will read them out and I will refer to you. Just let me get through some of this key parts and then we'll do it. Also want comments on the glasses and the French dog. Place micro orders with limits under price. So market entry. Here's what happens when you do market entry. You're chasing in when it's pumping because that's when you want to be in. The certainty is now gone. It's going up. The probability is now gone in your mind. That's how your mind works. You wait for the car to go, and then you say, I want to be in it. It's going. And you run in after it. That's what dogs do. Don't be a dog. Not even a French one. Be in the car before it goes, on the count that the probability is it's going to be setting off on that destination because all the indications are there. So micro, sizing, if you are using any leverage, very, very corporate. Do not use these crazy leverage platforms. 2x. If you have 10 Bitcoin, you can get another 5. That's using only 50% of what you have. If you choose the time and you don't do it all on one entry, because that one entry could be wrong, multiple entries. So we're talking about micro orders. Preferably don't use the leverage for most of you. I still believe that if you are trying to multiply, you need to be really alert and smart. The execution on that is going to be a problem. I've already mentioned it. But if you're already investment long and you've got a reasonable base and you're going to add a small amount more and you're going to be conservative, by the time this video is done, you will know the key levels that we think you will run and have some element of pullback. And we'll tell you where they'll be there at their biggest. We will also tell you after 26K where I think those bigger, higher overperformance levels where I'm seeing confluences. So you're going to get a lot of information. I've given this to my premium. I don't normally do this, give it also to you guys. But we want you to win, because if you're winning, you're going to be part of our community in the future, and we want that. So seeing as you will ignore above, keep it at 2 to 3x. Okay, so that's point number 5. Go to this video, by the way. Alex will I'll get assistance to post the link for you if you want to rewatch it and you missed it. If you start at your favorite, if you start to have favorable build-up of profits on the move to 26K, don't later whale up your sizing. So here's what happens. You stop watching the chart and doing the plan, and you see, man, I've got loads of free unused margin now. Isn't it a shame now that Bitcoin's going up that I haven't scaled up? That is the biggest danger that will happen, because initially you will be right if you do it and you choose and you're judicious. You get sloppy later as you think this is the big easy. That's what's coming. Don't do it. So don't whale in later. That is the inverted pyramid. Okay. The move makes the money, not the elephant sizing. Ignore the alts for a large degree. I like Ethereum every now and then. We'll tell you when it's overweighting. I will expect it to start moving strong. Bitcoin's movements will fix a lot of bearish looking patterns, like it showed us when we were wrong on ETHUSD. It just sucked it up, but not as much. Bitcoin is going to probably be your safest trade. It's not sexy to say, oh, Bitcoin. Everybody wants to go, yeah, but this one's done more quicker, Chainlink, blah, 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 Polkadot, I think for most people, you're going to be best served there. Stay humble. Don't get giddy as you start making the money. Don't start talking about it. The minute you want to start telling friends and family members how much you've done, you're about to get a pullback and you're probably oversized. Okay. Best of luck. And the community links are below. Okay, so that was the quick 6 or 7 points I left for you on that video. That video link is going to be shared below. I'm going to check comments before I go into the gold and silver, the technical part of this thing, because there's things we can learn about gold, GBP, gold, euro, and the Turkish Lira as well, where it is at and how it all went down with that. And will it do more? Some of you from the Market Sniper channel will be wondering. And what we can learn and put back on the Bitcoin chart. So once we've done that little bit of observational, we'll come back to the Bitcoin and say, how might it play out? And I'll tell you what those other two numbers are beyond the 26K that I think will turn into points where you may get rest and pullbacks. But that will be next level targets as part of the overperformance. Who wants to hear that? Let's have a look. Tell me if you want to hear about it. Phil Kogan says, there you go, Mark. There be demons, me boy. That's right, demons. There's demons everywhere. Some alts will, 100x blockchain tech will change the world. Automation age, says Lorenzo. He doesn't say which ones. What about the money we could make when we are facing a dystopian future? Yeah, that's going to be fun. You're going to have to spend it wisely, keeping the thought police at the door. Anything particular with regards our video so far, and thoughts or questions? Shout out to you, Francis from Hungary. Thank you. Nice to see you. Mr. Tsabo, invested into silver because of you. Good man. I think we will hit 50k BTC. Then they will kill it, says Ima Wombat. There is threat of folks doing that. On the government, reading a very interesting article, Lynn Alden, and she deals with one of those. The government will outrule it. Go register on Lynn Alden's site. She does some great work, and that's one of the threats, and she deals with it. Don't forget now, once the corporates start using it, like PayPal, it becomes harder for them to just kill it. It becomes harder. They can impose rules. They can try, you know, do stuff to make it awkward and tie it in, paint it into a corner. But just killing it becomes harder because now PayPal's very much a money-moving control structure company. The fact that they've engaged in some senses secures Bitcoin a little bit. But we can talk more about that in a future YouTube. I want to stay on topic. So watching as always, says Richard Watts. Great to have you, Richard. Thanks for showing up. Ian Creswell. What does the first cup gold nugget mean? So in terms of the charts, we felt, listen, there could be another down leg with the echo. So we've expected a wave 2 of COVID. We've been very clear about that on the Reset Sniper channel for quite an extended period. And we obviously had an absolute bedwetting event the first time. So the possibility existed that there might be a further sell-off when the next wave, which you're currently experiencing now, which we were discussing almost 9 months ago, before they even announced the first lockdown dates, that this event that you saw here might come again. First cup gold nugget is when you're in the game and someone gives you 2 guesses to find the gold nugget under 5 cups. And if you don't, you owe him a gold nugget. If you pull one of the cups and it's got the gold nugget, you get to keep it. First cup gold nugget means you're really lucky. The very first guess that you make brings out the coin. That means we weren't going to have another down leg in Bitcoin. So the very first qualifying event gave us that as the breakout there, and that there wouldn't be a smaller, more moderate one, a second or a third, or it extending and having minor wobbles and then a long period of tailing at very low volatility, and we're into 21 and then only then it breaks. In the end, the break has been confirmed because we've clearly passed the high 2, so you're already in breakout, and this was your return move. And this little wind up that kind of was 50-50 because it had quite a nasty sell-off behind it and was very weak on the alts, ended up being the resurgence of the second chance after running the first interim. So we now know where we are. We have a map. And that means we still have dominoes to fall. But the first cup gold nugget meant there was no down leg of any great significance. And now we're already in breakout. Ahead, remember, this broke ahead of the elections. While we felt that there could be some excitement with the elections, which there probably has been, but Bitcoin's moved anyway. So there you go. Previous videos also deal with this topic, so you can watch in there. Simone, yes, good to see you online. My lovely community members in here in force. Great to see you. Thanks, Mark. Did some great finds as well. Lovely setups. Thank you for that. Good work, really good work. We've got some lovely guys. And of course, they're high quality. Hey, high quality people. Okay, so let's get on with the technical bit. What's gold and the Turkish Lira got to do with all of this? Okay, so you might remember that these other two are other macro calls that we've made. Now, the Turkish Lira has been pulling back really strong right now, and we'll talk about that. But both of them had big time frame setups that have been in break, and they have been key themes that we've carried in our community that for maximizing. Okay, so let's talk about them. Now, the best thing is you're in early and you sit tight and you don't mess with it. Simple as that. Simple as that. But people arrive later. The key theme is playing out. Remember, these things run often for a year. They can straddle a year. They carry on. And some people want to find their way in. That's why we are talking about people that want to get a little bit of leverage in on something that's already broken. The ideal situation with Bitcoin is that you're a long leverage, light leverage at 10K. And you're still long today. And you doubled, you took 2x. You have 10 Bitcoin, you took another 10 Bitcoin long, and that 10 Bitcoin that you borrowed has now gone up 60% and is worth 16 of the old Bitcoin, which you only started with 10 of. So you had 10 at 100 grand when it was 10 grand, and you had 100 grand, let's say, and now you've got a long position of 20, 10 of which you own, 10 of which you borrowed, and it's now worth 16 each. So you have 320 grand, and you only have 10 grand to pay back, only 100 grand to pay back for the borrowed 10. So that means you are net 220 up on your 100 grand. You've done a 2.2x on 2 times leverage. Simple sums so far. And if it goes to 26K, I'll leave you to calculate that. My brain might bend. Okay, so this was the Turkish Lira. This is the dollar Turkish Lira. This is the recent sell-off that has shown that, there, and this is a warning, by the way, for all of us. And it was even slightly bigger than I expected because I was looking to micro buy and I was already getting in too high up. And it's a warning for me as it is a warning for everybody else. But this will come to, and you'll go, but this is FX, crypto's different. No, there will be a period, and it might take quite a while before it happens, but where you'll get an outsized sell-off. And even along the way, nothing goes up in straight lines, even crypto. And price behavior is driven by human nature and their respondents in the voting machine and their pain and suffering and their greed. So the fact that you run up real fast is usually a precursor to, especially, this wasn't quite parabolic. So that caught me a little bit, but we did have quite a fast run here. And you can see it, if I do it in blue this time, you can see the Turkish Lira there. Quite a fast run. And then bam, it's actually moved quite consistently from here, this whole way up to there. And it's your first real pullback. Now, that will happen at Bitcoin. And here's what we're here to warn you about. Now, if you've just bought leveraged long and you've come in a bit strong over here because you really don't want to miss it and you want to be part of the main theme and you want to become a millionaire, and you've decided the way you make that happen sooner is you add size, well, you're going to probably blow up what little investment Bitcoin you do if this was the Bitcoin chart. So let's go into the fibs and have a little look and see what we can learn. Another warning for you that even though this has been largely a net long game, like all charts, there will be snapbacks if you do too much too soon. Remember, how many weeks did I catch you that you've largely been up on Bitcoin? How many weeks? We have a level for you that we'll be going over as to why. But let's see what happened with this in terms of examples. So overall, that was a fib on our journey, and let's talk about it. So interesting to see, and then we'll take this back to BTC and see what we can learn after we've done this in gold. So the 23.6 fib, a reaction, a pullback to funnel. Great. 38.2, a reaction and a pullback. A blast through 50 all the way through 61.8, one of the most significant fib levels, if not the most significant between the 0 and 100 at least. Pullback all the way to the 50, and then inverted head and shoulders type structure on the 50, and a controlled peg. All, they didn't know it because they don't do technical analysis, but the Turkish central bank tried their peg against the dollar, throwing dollars in to protect their currency here. Basically, they were trying to keep a ceiling on it and burning all their dollars doing it at the 50% fib. Do you think they had to do technical analysis? By the way, we had this key round number of 8 in line of sight because it was just before our HVF, just after, my apologies, our final HVF target. So if we get a key HVF target and it's near to a very key level, what typically happens is that is a confluence and you get a moon shoot through it. So both levels get run, but then because you're having a moon shoot, you have a much bigger pullback. So it's kind of like the horse. Instead of just loping up at a canter and jumping one fence, you put 3 fences in a row and it's got to come at a full gallop and it's exhausting. At the end, it huffs and it puffs at the other side and it's pretty bloated, tired, exhausted, needs a drink and not ready to do much more charging for a while. Okay, that's the progress decay period. So what did you then get? You got that 61.8% run, you dipped all the way down, you broke the 50 and then you had a peg at the 50 for a while. The 78.6 is not a huge fib. You ran up and you broke eventually the target that we had of 8s at the 100% level, and you had that blow-off period to do it. That was largely up. It was the big easy. You know, when your account and your P&L is just going amazingly every minute and every day, every time you look away and look back, you've made more money. That's the beginning of the end. Usually. And that's usually when you say, imagine how much more I would have made if I just had added another bit of size now. It's all going to the moon now. That is what has to be resisted. You're getting into a late stage, post the target being run, which is why you would have taken some off if you're an HVF trader with us, and you're getting into a late stage surge where everyone can't bear not to be in, and to be the only idiot that once spoke about crypto a bit but's not currently owning any, and is sitting on the sidelines looking like a fool when their mates talk, that they just buy to be in, and price is not significant. I call them almost, they don't realize it, but they're the not-for-profit buyer. And what happens is you get that surge and then you get that first really firm slap in the face. Now you might notice that you also got a reasonable pullback of some scale, and we'll talk about that. You'd made your second interim and you were at the 61.8. And then you pull back all the way to the 50. When you take key levels, we will show you where this point is on the Bitcoin chart, where we think it is. We don't know for sure. And we will also show you this, remember that as a possibility for what Bitcoin might do post 26K run. Because the 26K is like the 8 here on the Lira, and our 25,700 is like the 7.8638 target on the HVF. So that's on the in-play segment. There will also be projections beyond, and I'll get to that in a minute. So that's what the Turkish Lira could show us. That was USD try that I just threw down there for you. Maybe we'll have a look, because the dollar was a little weird. We also can have a look at the Euro try. So this is actually the same underlying market, but it's just me looking at it with a slightly different pair, because the dollar had its own story within all of that. So again, good confluences, 38.2, probably the most significant outside of the 61.8, pullback, bit of a ceiling, squeezy under it, very ascending structure. Normally we warn against that. Inside the confines of a macro, big time frame, HVF to the upside, we expect generally the bias is to bull. If it's an upside pattern. Of course, if it's a downside, it's to bear. And what do you get? You moon up to the next level, which is your 50%, you have a pullback. You basically cover the easy yards to the 61.8, then you churn for quite a while, and then you grind, touch You touch the 78.6, it's a significant, but not as significant. So you get a small continuation pattern flag dip, and then you go into your moon phase and you run the biggest key level of significance after 110 on the euro try. You just run it, you exhaust through it, and you pull right the way back down. Your biggest pullback, bigger even than this midterm one over there. Those two in the TG pink, your big and your massive pullback. Post target, massive pullback. That's what will happen on Bitcoin. No matter how bullish you get, there are no straight lines up. Hear me now. Okay, so that is Turkish Lira looked across two pairs, what you can learn about it. So I still think on this, because there are some people from the Market Sniper channel and are saying it's still the puppy that licks your face. We got a bite in the face very shortly afterwards, which just shows timing, how you talk when you're at your high points. But I still think that this is going to have a moment of parabola in a similar fashion to this. So I'm not done with this macro, but it's not the time yet. It will give me a chance to buy. Remember, these, just as a sidebar for those that were watching our key theme, when you really move like that, the Turkish Lira has already shown us a parabola. That was a firm and strong move, but it wasn't the same scale of blow-off move as that. So I will probably come back into this one, but it's no longer inside the confines of the HVF. The target's made, the nearest round number to the target was made, it blew off, and it's had its first major setback. Boom! Great. It will wind up again maybe. It will give me new structure. It'll show bottoming. I'll come and visit again. But in the larger confines, the reason you have a big time frame structure pattern that is probably the first of its scale, in the case of Bitcoin certainly, is that you will likely have further moves. You just need to rest. So the trend is your friend, and one of the key things we do is we keep on keeping on. Okay? So we will look for longs generally. Rarely is it a complete reversal just because you made a target. Let's look at gold. Gold, other people talk about, you know, Bitcoin's meant to be crypto's gold. So let's have a look at its real world commoditized friend. Something we've referred to as the God market. In actual fact, I want it on the euro and the pound, not dollar. Okay, so here we're looking at the precious metals. So we've done Turkish Lira. What did we learn about the Turkish Lira? Well, we learned that you'll have, usually on the way there, you'll probably at an interim level have a major pullback, and fibs could prove useful as well in identifying that. Post target and the nearest round number being blown off into, you'll usually have a fairly substantial pullback. That's what we've learned. We didn't do anything forecasting forward yet. Okay, so how did it play out on gold? Well, this is the daily. Maybe I'll show you the bigger time frame first before we drop into the daily. That's how it played out for gold. This was our target for the euro gold. The original macro pattern. There. This purple line that you see there. That was our original target. We then got a little wind up on the way that gave that as a target. So it said, you're going to get a teensy weeny bit more. Okay, that's what it said. That's how, that's the history. So essentially, from 2019, the falling wedge, you should have got long early. You could have got in just in time at those two places, and you should have closed at the other two boxes, a percentage cut down. So what did you sit through? Well, you sat through COVID-19 in that dip, which was more extended on the euro than the pound. You'll see the pound coming now. But in spite of that, if you were long down here, that should never have worried you, because the profits you have made. So the key thing you should learn is, by being an HVF method student and trained, is you get in on the trades from the beginning. At the just in time is the last entry. You're in. If you're in from there, everything that happens on that journey shouldn't matter to you. You just set and forget. Go and play. Don't get greedy. Don't try inverted pyramid on the way up, as you get more confident as it starts moving, which is exactly what people do. So at the second interim, which was there, we had a pullback. It was a falling wedge. It was also the run of the 38.2. Very similar strength to the 61.8. Those are the two key golden means. The one is what's left after you've taken the golden mean, and the golden mean itself. and they will always add up to the full move. That captured the high of where it was. What else happened? You ran the 61.8. At the point of running the 61.8, guess what happened? Chance of all chance, it's when you got the whole COVID drama released. Isn't that interesting? Most important fib level gets run. Hey, have a virus. Let the whole world sell, get money, hunt for liquidity, fear and loathing. The world's going to end. What did you then do? You rallied up to the 78.6 twice. You pulled back to the 61.8% once. And then you went back up to the 78.6. And then you went parabolic from the 78.6. Well, not quite parabolic, but very firmly strong. So let me just show you that. It's worth taking it back down to the daily for that, so you can see a little easier. And remember that we're doing all of this because we're going to talk in the same way on Bitcoin, only Bitcoin is an uncertain future that we are scenario casting for. There you can see what I mean by a very strong move. This 61.8 or the 78.6, a couple of times it was resistance there, and then you just went on the move and finished the job. And you finished that wind up target as well as the main target. So HVF method sold you into the strength exactly the way it should. And what then happened is you're largely down here. We don't know if it's a falling wedge, if it's a flag, what's going on here, but it's in progress decay period. This too will happen to Bitcoin when it runs its key level of significance and its target. The run up might start deeper and get to the target and do much like this one. It might start just before the target and overshoot a little bit more, and you'll then say, damn, I sold too early if it trades 27,250 or whatever the case may be. Don't worry, there will be a chance to get in again. Nothing goes up in straight lines. Someone is talking about XRP. Do you think Joe Biden will destroy Bitcoin? No, I don't. I don't think Joe will, and I don't think Donald will. Neither of them has said, Trump didn't say anything particularly positive. He's like a dollar enforcing the dollar. Neither of them work for you, by the way. One is easier to load than the other, maybe, depending who you are. But if you're smart, neither of them work for you. PayPal, Bitcoin, that's a big problem for them if corporates are starting to invest, hedge funds are starting to invest, basically to zeroize other people's investments. Not good form. Not good form at all. And I've often said, you don't know the full story about Bitcoin. It's open source. They like what it's doing. They know what you bought with your Bitcoin. So I'm not sure that's so. I've spoken about that risk. Go check Lynn Alden's comments. She's a great commentator. And she said the 7 questions to answer on Bitcoin. In fact, I still have it up here. I'm still part the way reading it. I like her views and opinions. I'm a fan. And, you know, we're talking about gold being illegal for a while back in the 30s, how they killed bond and debts during that period. Governments will ban Bitcoin. Another legitimate concern. They did block gold, and that literally comes out of all of that. The gold ban was hard to enforce. There you can see it. So go read exactly on that. There's other people that write better than me that have covered this and have got great analysis. And I would say Lynn is certainly one of them. So go and have a look and answer that question through her. Now, interesting part of all of this is if we go up to the 3-day and we pull it up, I still have a view that the 1.618 on gold euro will run and the 2.618 will probably run, but that's going to take longer. We're going to need wind-ups, setups, and we're still clearly in a progress decay period. We'll talk about that when we get to Bitcoin, when we have some interesting assumptions for you. So this is gold against the pound. So I did euro try, I did USD try, now we're going gold, euro, gold, pound. Both of these gave us great targets. Ignore the numbers and the melee there for a bit. I'll just do close the eye. So in essence, you should have been early long here. And the fib basically got you out very, very close to the top. Let's just switch that back on quickly. There There you go. I've put in some key levels that we'll see better on the lower time. So it's just a bit of a bedlam in there. So note again on the bigger time frame, halfway mark made, pullback back to the 23.6, 61%, 0.8% made, big pullback, push up very abruptly to the 78%, pull back to the 61. So quite a bit of thrashing here. And then again, the moon cycle to finish. That was to our target that I set the fib, and you got a little bit of a boost. You got a little bit of a boost there. So other interesting things that we were doing is like, okay, how interesting will Bitcoin look if we do the Fibonacci on Bitcoin for overperformance? Now, what I also saw is if you go, let me just see which one was it, to the euro. It might have been the euro, gold euro. If we took the last major pullback of the gold euro and projected it, and this is something I will be looking to do with Bitcoin as well, from when it broke, from what we call our relative low 3 to the upside, where are the key levels and confluences? So let's just go back to Bitcoin quickly. And I'm going to take a clean chart. And you can see it's a lot smaller time frame we're on. Can you put the aircon on? So let's have a look at this. Need to drop the time frame a little bit more. Okay, these are our key levels that you need to know about Bitcoin, and this is something that keeps coming up for us. So our second interim is occurring on the 38.2 fib from when we decided to measure our Bitcoin. That is all at the 19,099 and the 19,000 key level. Very, very interesting. So something we push through there, I would expect some degree of sellback now after that event. So watch out for the run of the 19 and the 19,099. Those will probably go together. Now, before that, on a lower time frame, the subject matter of our previous streams, we also spoke of the smaller structure that you've had here that has a 17,000 target. So I suspect there's a chance, that doesn't mean there's a guarantee, that we will run, and you'll see I've marked the 17K level there as well. We will run 17K and also have a moderate sized pullback. So for those that aren't in, firstly, you're an idiot. Why aren't you in? We've been saying it, but we love you. And we've also been idiots, so it's okay. Now we're saying to you, if you want to buy for your investment pot, maybe acknowledge the fact that you're late and that there's probably going to be a 17K run and that you should have been in over here. And if not there, once you realize this was an upside break, you should have been getting in over there, which is where we corrected for switching to to first cup gold nugget. So 17, you probably get some form of a pullback, 17K, because that is the target we're getting. We're getting 16.99, and it's also got a key level of significance, 17 runs. Then it pulls back. How far? Don't know. Don't know at all. Could pull back all the way to this 23.6. This is a log scale, by the way. So it's you need to realize that red band is a lot bigger because it's being percentage based. If you do it like that, all those draws seem out of place now, but I think it's better to look through the log scale. So I think most of you understand that principle. So then we have a possible up move. Let's change pen, sorry. Then we have a possible up move for what we call our second interim, and then we'll probably expect it to rest again. That's the 19. So 17, just run, pull back, potentially back below 17. We don't know how far, but possible. If it came to the 23.6, that would be quite a strong pullback. That would be back down to 15K levels. It'd be most unwelcome by many, but still be totally acceptable and normal. Remember the gold and those COVID sell-offs against pound, against euro? Remember the Turkish Lira after running the 38.2, how it pulled back right the way down to quite a level below where the peg existed. That's something that can occur. So that's your next level. Write these down. Then 25 and 649 to 26K. So you've gone up, you've come down, you've gone up, you've come down, then you wind up, you go up, maybe quite fast, and then you get a big pull down after that. That will be part of your journey, potentially. That is a scenario cast of the key levels that post running, you could go a little bit beyond and then have a meaningful pullback. You've seen it there. So interestingly enough, we put our fib on our final target, and this is some number that it keeps coming up. So this is now talking to the top side. What will be big levels that once this has sorted itself out and starts going up again, where will we rest again? And I keep getting on a variety of studies, 36K and 54,000. So for those of you beyond the target making, which is why you want to stay net investment long, do no damage. Most of you, this won't suit. Do no damage with any very light positioning you do to bulk you up with any form of very moderate leverage. Do no damage to your investment pot, because if you reduce your Bitcoin when it gets to these levels, as I think it will, and this I'm saying it's not like $1 million call or a $250,000 call like some of the other guys, and they're talking years out. I think this is 2021, the 36, and I think there's a decent chance the 54 is too. And if not, maybe it's 22. So don't kill your Bitcoin by being greedy and not understanding the use of leverage. The city boys have models. They're taking your Bitcoin off you because you have lack of skills. So please don't do it. The game is to build Bitcoin. Okay, so those are the key levels. 54K, 54,000, 36,000. The cluster around 26, which will be our targets. Your short-term concern, let's drop the time frame to highlight that. Your short-term concern, to drop the time frame into 4. And maybe 1. This little fella here that we've introduced to you as an opportunity to nibble in and to build a little bit of trading extra Bitcoin if you execute correctly. You should have been in there. I say should have. You could have if you wanted to be. Nobody has to do anything. You could be in there. We're waiting. Each of these little pullbacks are probably dip buys. It was a little bit, made me a bit nervous there. Don't watch too much on the small time frames. It's very easy to get yourself nervous on that, and you'll end up tinkering, jumping in, jumping out. The only people who make money if you're on exchanges are the exchanges. That when you do that, the money is going to be made in the sitting during this period. This is just showing you where there are possibly some opportunities for people that have not got their investment Bitcoin in, and very conservative people that understand that you have to own your own outcomes, and you could get in very small amounts, possibly with a wee bit of leverage. And this one's target is up here, and it's right by the 17K. So that could see also a period where you get a bit of pullback for you. The smart that have money on the sidelines will wait for that and will pick it up on the down leg and will be. So this is that, remember that YouTube, buy the damn dip? This is that video with the smart girl asking all the smart logical questions, and the guy just goes, BTFD, BTFD. You stupid person. What are you not hearing? BTFD. So it kind of is like that. But don't do that with leverage. Do that with cash that you have onboarded to build your Bitcoin and that you can hodl through. Or be very judicious and know your timings, and these are the levels where you're doing it. So I'm kind of giving you some information, but I'm hoping you don't misuse it, because you could hurt yourself, especially those that are planning on utilizing leverage. Okay, let's have a look at some questions and call you out by name, and thank you for commenting. XRP Freak, a car is a car. Zcash, halving on 18th. Razan, nothing, just be how you are. Hey Sniper, what's your take on NEO? I think, is that NIO, a new coin? I don't know. Or is it a misspelling of NEO, NEO? I don't know. Will it displace Tesla in Asia as top EV? So it's a car maker. Okay. I'm not doing traditional markets. This is crypto right now, guys. I'm greedy. I admit it. What do? Golden Pill is greedy. He admits it. You stay investment only and you deny yourself leverage. You have to earn the right to leverage. Earning the right to leverage means you can control your greed whims. If you're not yet in control of them and they're doing damage to you, just invest. So the only thing you do with the information I've given you is you wait for those pullbacks after the 17K run. You wait and check when it starts to see support coming in. So you get something like this occur, for example. And you BTFD with real cash that you own, no leverage. And all the way you end up buying along the lows. And then you wait here, it goes up, you have a sell-off, you buy along the lows. You only use limit orders and you only use cash that you already have. And you should have been buying along the lows here and buying along the lows here. And in other words, you're getting fills on the bottom side of the market continually. Only with money that you already own, and you are not allowed leverage. So you have a Exodus wallet or whatever you do, and it's no leverage. That's what you do. That's your answer. Hi Francis, by the way, smiley face, says NHJ. Cardano analysis. So let's just do something about alts, because everyone's going to ask the alt question. And the safest place for me, for most of you, is right where I'm taking you. Because where is your pattern? This is something you'll learn if you come on a program. We trade our best patterns. And we need to remind ourselves to trade the best patterns. So this is where the Bitcoin dominance is. And you can see what it's done recently. So if I go to a 4-hour, that's what's happening in Bitcoin dominance, generally on a moderate time frame. That's what's happening on Bitcoin dominance, moderate time frame. Yes, on days, even weeks, Ethereum will overperform, Link will overperform, Coin X and Y will overperform. Trade the macro pattern. It starts to get complicated if you are holding, you want to trade, you're going to rely on Bitcoin being strong and Bitcoin meeting those levels I've just given you, but you're going to be instead putting the longs on Cardano, on Link, on all the others. The dominance is showing you where you should be. We can go to daily dominance and you can still see that the alt season was here and the Bitcoin season is now. The Bitcoin season is now. Stay with the trend of the Bitcoin season. This is, you over here, you didn't really have highly convincing moves. You had regular sell-offs and it created structure of patterns. This has taken out this level. This gave you reversal lows for an extended period. It's taken out that level. This is a reversal. That was not a reversal. Not a reversal. Not a reversal. Not a reversal. That was. And it has reversed. Stay with this rally. Stay with the rally. Because you could find you'll chase into the others, you'll buy Coin X, and this continues up, and you're going down minus 1 or 2% on a day. Let's just, I don't even know what answer I'm going to get. Coin market cap, last 7 days. Oh, I don't want the highest one. I want market cap. Let's do market cap circulation first. Okay, last 7 days, Ethereum has beaten Bitcoin, but the 3 weeks before that, it hasn't. Tether hasn't. XRP, kind of the same. Chainlink has. in 1 week. Bitcoin Cash hasn't, Binance hasn't, Litecoin hasn't, Polkadot very much the same, Cardano has. So Cardano and Chainlink clearly beat it on this 1 week. And in the previous weeks, largely not. So if you want me to take the highest one, Chainlink, I'll do Link. So that's Link USD. By the way, I'm not a big fan of that. I don't like that. It's had that sell off there and I don't like that. That's the daily chart. It could be a down move after Bitcoin makes it 17K. If it does that and it has a strong pullback to the 14K, these things will lose 30 or 40%, or can lose 15, 25%. Bitcoin can drop 3 grand or 2.5 grand. These alts can lose 25%, some of them. That's what you're buying into. You want to trade leverage with that at a point that Bitcoin might have a fairly reasonable pullback, you're going to get killed and you're not going to make Bitcoin. If you hodl and you own, different story, you'll eat it and that's fine. In the long run, alts, Ethereum particularly, I quite like. I think at some point it'll start overtaking. So in that journey to 34K, to 36K and 54K, I will also be watching Ethereum, its relative progress to Bitcoin. So let's go Ethereum, Bitcoin as the queen of the alts. So this is answering a couple of questions about what about the alts. I want to make this about Bitcoin. You've got the pattern and the structure and the information on Bitcoin. You don't have it on Ethereum. Not that I've seen anyway. So Ethereum is yet to make the high point that was a target for us of 478. It's yet to make that high point and surpass it. It's worked its way back. And it's bounced off this very, very long-term legacy funnel that most of you won't remember, but we remember and we traded, that went with this log scale chart. This is a log scale chart. That was a huge wind up, and that looks so deceptive because of the log scale, but just to make it proportion come home to those that battle. That's it. So long term, I expect it to take that high and move on up. And this was where we were saying, are you trying to get back through this to the downside? And Bitcoin went up, Ethereum was pulled up with it. So it will start overperforming, and the way you assess that is you obviously look at FBTC. And for us, it's in a big reversal against Bitcoin, potentially. You won't be able to see, there's too many annotations now, but let me just hide that. What you could be in is that. So we're expecting to get strong on it, but we literally to the day had called high with that, thanks to one of our students, and we also traded bias ETH long during this period. So I'm ready to be bias ETH long, but I'm not into that. Now you've got a hammer that says it could be the low on that right shoulder. It could be basing out, and you've got an indecision candle, a spinning top. It's Friday. It's already a week now. Saturday and Sunday to come. You could get another hammer. You could start the move up. If you start the move up, that will be Ethereum dominance over Bitcoin. And I'm expecting it at some point. I am expecting it at some point. But you split your resources over Bitcoin and Ethereum, and you try to have the same size on both, you end up over leveraged and correlated, highly correlated, with a higher beta new party. That's more schizophrenic. So that's kind of like you've got a full car and you invite your schizophrenic mate that snorts coke and he jumps around like a loon. And there's not really much space of him, and you squeeze him in the back. That's the kind of journey you will have now. It's going to be tight. More and more people are going to be asking for you to stop for a pee and many other things. And you're going to have this bouncy squirrel in the back. So watch out. Watch out. If that means you've got to halve your positioning in Bitcoin if you want to put a 50% allocation in Ethereum. And it could be bottoming, but we'll wait for it. There was also a head and shoulder pattern in there all the way down to 25, which is still outstanding. So we're not going to rush it. But the hammer is encouraging. But that was last week. So we'll see. We'll wait. You'll know for sure if you get back up to many reversals. Don't always reverse. Remember, we're not by definition reversal traders. We respect patterns. But the HVF is God for us. We'll wait. I'm quite okay with missing out on that bit. Might nibble a little bit in. Distribute a bit of Bitcoin. Bitcoin, I have the largest super macro pattern. 25% of its entire life. Of 10 years. In the making. That's a big baby it's going to give birth to. That's why I'm talking about a 54 and a 36. And I have levels, pullbacks, a real read on it. But if it does that, Ethereum will be doing mighty fine too. And at that point that it does a final little pullback and does a little wind up here and gets ready to do that, I would certainly aim to be long. But who knows when that comes? That's not to time frame, by the way. I need space to draw. That's not May next year. It's not a prediction. I'm just saying, how long will it take to get up? And when it hits that psychological level, that is pretty much 33. So its levels are 33, 25, and 40 that it made on the absolute high targets there. So has it finished on its journey for the 25? We'll wait and see. But it does look promising for Ethereum slowly. But that could be spoiled with one more spill. So we'll see. You don't have to rush in early there. Bitcoin's doing just fine. In the meantime, holding your walls. Okay, transgender friend. Yes, a schizophrenic, cocaine-taking transgender friend that doesn't know which orifice out to pee out of. Colin likes that. Janet Yellen. That was Janet Yellen speaking. Thank you, Miss Yellen. I'm glad to be advising the Fed in their official capacity on all things Bitcoin. France Suts, finally catching a live session. That's Gabriel. Welcome, Gabriel. Nice to have you. Where are you from? Tell us in the comments. Greetings from Venezuela, he says. Fiat confetti currency. Don't worry, we'll all be joining you soon. Now, a comment before I close. Don't forget the links below, by the way, to join the community. The free trading course below is also available. Okay, what will it give you? The 5 M's. It will give you real foundational aspects to consider for your trading. Some of these things I've done in a very organized, decent way. All the vids, 5 to 10 minutes, maybe one's 12 minutes. Okay, one a day. If you want it quicker, you can zip through it. Really useful, totally free. Go and enjoy. That's for, see what we're about. It's not going to be a hardcore technical. There's one vid that deals with some of the aspects on a chart. It's foundational. Concepts really have to grasp. And if you get those, you lay a great foundation for it. Key thing, we're talking about fiats and fiats going to confetti. Remember, relative to each other, the majors don't have to. I was having a chat on Telegram with someone whose opinion is similar to mine. They don't have to, the Euro USD, you don't have to have one that just loses all its value relative to the other. They're going to do the same thing. This is a coordinated cabal. So they're going to do proliferation of money. That's essentially going to cause hyperinflation of assets. Now you can go buy this stinky stoink market, or you can get gold, silver, and crypto. Maybe you should still be considering what I call a stuff you portfolio of their stocks, but they're very, very overstretched because that's where all the funny money went, as well as supporting the bond market, which I also have concerns about whether they'll be able to do that much longer because the parabola that they're in of debt creation is just getting ever larger, and they're having to self-sustain it. So debt jubilees may well abound, but that comes later. UBI and all the other things, police states, martial law, these things that they're draconianly bringing, I'm afraid, are going to come. So make your money. And there's going to be asset inflation, but do that through crypto. I think crypto is going to become of a greater scale so that more and more money will go. And as it gets bigger, it permissions bigger amounts to come in. But the percentages that it grows will over time convex out, and then it'll be relatively stable like currencies one day, Bitcoin. But it'll be a lot bigger market cap for that to have happen. So the emergings might fail, like we're seeing in Turkey, but they're going to try keep a lid on the emerging dominoes failing by proliferating and devaluing their own currencies too, and then giving that money to special interest groups, corporates, and UBI. So that's going to be the game. So there's going to be a lot of funny money floated in the system, and this is going to drive Bitcoin, gold, and silver up, and that's why those things are going to be very, very useful. Watch out for those 1.6 to 1.8 targets. There's one thing I never did, and I lost my chain of thought slightly when I was doing it. I was trying to find out which one had I done it. I think it was, I'm going to go back to gold again. I think it was the gold pound and the gold euro. If I just go back there and put the lamp back on, one of the things we found is that these hyperextensions of the Fibonacci's do sometimes prove quite interesting. You can see how it's reacted to Fib levels generally, will potentially prove quite interesting for gold, silver, and that's what I was showing you on Bitcoin, the 54 and the 36. Now I've done a couple of analysis utilizing in different ways, and it'll be a bit intense to do and to extend this video. We want to wind it down now. There's 394 of you watching, by the way, plus we got 191 likes. If you think I'm wearing absolutely cranky sunglasses and t-shirts, please hit the like. If you think I should grow up and act my age, please give us a share to Facebook. And if you think scenario casting the future of Bitcoin and giving you key levels where it might pull back is actually valuable, please give us a retweet to Twitter. You'll note there's no thing that I give you for a dislike, but if you really want to dislike us, you can do that too. Okay, so yeah, so watch those fibs are quite useful tool. You can go check it out, but we use it in conjunction with key levels that have already been shown to us, and that comes from inside HVF structures. So from when does the impulsive move begin? And that's very important that you define that and you know how to do that. And that's what's opening up some ideas as to the shoes that will fall on the way up. And of course, once Ethereum's turned, we'll be back weighted in. Okay, thank you for watching. Grab the links below. Go book, if you want to have a chat with one of our guys, book a call to come and join in with us in the community. We're waiting to see what golds do. How long will it congest? How long will the Turkish Lira congest? Those are interesting things that will also give you an idea that you'll get all the bubble callers coming out. Newell Rabini will call Bitcoin a bubble once it's run that high and it's having a sustained period of pullback, kind of like what gold's doing now in this chart here. Other people, haters, etc., they'll all come out and do its stuff. There are still risks. I mean, I don't think government, once big corps are involved, like PayPal, you can buy Bitcoin on PayPal in some countries now. I don't know which ones they are. I haven't seen it myself. I'm just seeing people talking about it on Twitter. I don't know where that's happening, but it's going to be quite a hard ask to take hedge funds assets and zeroize them. It's not impossible. Governments don't have to support assets that people or big corps are owning. Ray Dalio still thinks governments could just cancel Bitcoin, and other people like that. So, you know, maybe he's right as well with others. But for now, it's getting bigger. The market cap's getting bigger. You've got to kill a monster while it's small. PayPal's integrating it. So I'd say there's always risk. You don't get to own an asset that can go up that much and then say, but I don't want any of the risk that goes with that. Well, if you don't want risk, go buy a government bond, which I actually think is very risky, but personally, that's what they'll tell you is not risky, and earn 0.01% in a devaluing fiat. That's what I call guaranteed risk and guaranteed loss. So as long as there's those uncertainties, that's what gets you the high performance. Once it's very well established, it's not going to be doubling in a year. It isn't going to do it. It's just not on. Because there's no real risk that will happen. And most of the money will already be committed. There's not going to be that much money on the sidelines. The risks keep the money in the sidelines that sees the extra normal growth. And as this unfolds, it gets more stable as more people are committed and more institutions. What does the bottom of the shirt say? Excuse my French. There is French blood in this orange bespeckled animal. Buy XAUD and BTC. That's it. That's it. That's it. He's got the message. It's Russian name. Government bonds, return free risk. Yeah, says Asito Rasuko. Good gag. I like it, Asito. Good to see you again. Okay, guys, I'm going to close this. Share it. Sharing is great currency for us. We appreciate it. If you'd like to have a chat with our community, at some point we might have to, cut off new entries. So grab that opportunity while it lasts. This reset is a polarizing event. There will be those that were early in crypto and knew how to exploit it, early in gold. There will be the rest that says in government I trust, and they will become serfs to government. They'll be the first to be vaxxed. They'll do exactly like they're told. They will have their assets stripped off them and be given UBI and be given happy pills so that they walk around in a smiling daze as some transhumanistic biotech tout, antidepressant amoeba. And then there'll be blokes like us that are still fighting for our independence, that have got some ammo to do so, that have secured a little corner of the earth we can't be thrown on, that still has property rights, and are eating organic, wholesome food, having a good life, and seeing our time out in joy, happiness, and bliss, and protecting and educating our kids away from the big Bolshevik end game. That's the nature of all of this. Thank you for watching. Appreciate it. Share it out, and make sure you extract to the maximum. But the move is what will give you the return, not the maximum leverage. Okay, so invest. The bulk of what you should do, investment. Safest thing is actually just to add half. If you insist on leveraging, add a half size position to what you already have with very moderate leverage as a complete hodl. If you want to be a little smarter than that, choose the time frames at these levels we've given you. 17K, run, possible pullback. Buy the lows there once you see signs of reversal, or join the community and do it all with us as it's live and happening. Then 19K, second interim, possible pullback, and then after the 25 target, 26K round number run. Bigger possible pullback, try pick those lows. Otherwise, come and join us and do it live with us. I'll be going live with my community at those key moments. And we're going to be doing our damnedest and best, applying HVF method. We have a real process and method. Sometimes it'll work. Sometimes we'll be a little bit early, a little bit late. Sometimes we'll get the direction wrong, as you saw recently. That's okay. Imperfect. The method is brilliant. Our interpretation and application of it is sometimes imperfect by human nature. Okay, bye for now. Thank you for coming on. We'll catch you later. All the best.